Hello there, welcome to myfinanceteacher.org. In this video we're going to have a brief market review looking at precious metals, the general stock market and even cryptos. Let's start with gold. Last time we looked at gold together on YouTube was the 5th of March. Back then I was expecting gold to start a new short-term rally into this third daily cycle of the ongoing intermediate cycle. And we do see gold strength over these last couple of weeks. My expectations for gold since the previous videos haven't changed substantially. I still expect gold to continue higher within this third daily cycle. After all, the ongoing cycle is only less than 2 weeks old now, but I don't expect significant strength, to be honest. What I do expect, as I mentioned in the previous video, is perhaps a bit of a break above $3,000 that might turn out to be a false breakout to trap some of the less experienced traders. A bit of a bull trap perhaps. After all, markets do tend to hurt as many people as possible. After a bit of that bull trap, I do actually expect a drop down, a more significant drop compared to the late February decline, a drop down into the intermediate cycle low. After all, these intermediate cycles, on average, usually last for around half a year or so on gold, and the ongoing cycle has been going on for 119 days. So pretty soon, perhaps in another few weeks, based on the average duration of these intermediate cycles, we would actually expect gold to decline down into that more noticeable intermediate cycle low. And beyond that, seasonality would also agree on gold as well as the general stock market. Often we do observe that the saying sell in May and go away does tend to be somewhat correct in these markets. Hence, a decline later on after a fake poke through the $3,000 decline down into the intermediate cycle low in another couple of months. This would be my most likely scenario. But there is something else to notice looking at the US dollar, which has dropped significantly within this third daily cycle of this ongoing intermediate cycle. And since that intermediate cycle top, when it marginally broke above 110, it has already dropped by over 6.2%. That is a significant decline. We see multiple pokes below very wide Bollinger Bands. The 14-day RSI is pretty deep into oversold territory. It's all the way down at 25. That's perhaps some of the lowest levels going all the way back to the late 2020. Since the beginning of 2021, we've only seen RSI drop convincingly below the level of 30. 1, 2, and this is the third time since the beginning of 2021. So the US dollar is pretty oversold, and being so oversold, it's quite possible that we have actually seen the intermediate cycle low on the US dollar a couple of days ago. So if not tomorrow, if relatively soon the US dollar tends to strengthen a little bit, that might actually put some pressure on gold price. So while this is my most likely scenario where gold continues higher to poke temporarily above $3,000, there is also a small chance of a more immediate correction, perhaps marginally poking above the most recent high, so poking above 2960 or so, also trapping some number of inexperienced traders that are waiting to sell at that round number of $3,000. So a more immediate weakness in gold due to potential strength in the US dollar might also take place, but this is a less likely scenario. I would only give it, say, 30% chance. Next, moving on to the general stock market. This is S&P 500 in front of you. The last time we looked at S&P 500 together with the viewers on YouTube was on the 24th of February. That was the very beginning of this most recent decline. And at that time I was expecting this decline to continue for a short while down into the first daily cycle of this new intermediate cycle that has been going on since mid-January. Frankly, I didn't actually expect this decline to drop significantly below this 200-day moving average, but we did expect weakness. Unfortunately, we have created a lower low versus that mid-January low. That means that there is a pretty good chance that this intermediate cycle might have actually topped within the first daily cycle, meaning that after a bit of a bounce into the second daily cycle, whether anytime now or relatively soon, so after some strength in S&P 500, perhaps coming close to retesting this 50-day moving average, there is actually a pretty high risk of general stock markets continuing down, retesting the most recent lows, at least around 55.30 on S&P 500. Again, in accordance with that seasonality of selling in May and going away, which would agree with this intermediate cycle which is still ongoing, already making a lower low, hence topping a little bit early. But as these intermediate cycles usually last for around a half a year or so, we would continue further weakness after a short-term bounce into the second daily cycle. So I would advise some caution in the general stock market after a bit of a bounce, whenever it comes, either immediately or in another few days. Moving on to Bitcoin, we haven't talked about cryptocurrencies here on YouTube for a very long time. I'm not actually sure when was the last time we reviewed Bitcoin charts with you. Generally, looking at the history, for multiple years already, Bitcoin cycles have followed an average of around 2 months duration. And since the pandemic lows in March 2020, the precise average has been around 63 days for these Bitcoin cycles. But of course, the duration might stretch as long as 81 days since early 2020, or as short as 51 days. It might have actually given us the cycle low on the 11th of March, a couple of days here, although the cycle would be somewhat short at only 57 days. That's still pretty close to that average duration of around a couple of months. Plus, the previous cycle was relatively long. So a balancing duration of perhaps 57 days might actually bring us back towards that typical duration that I've just mentioned. Looking at RSI, we see a bit of a positive divergence, that is a higher low on RSI versus a lower high on price. Positive divergence often, although not always, is followed by a bit of a bounce. In this case, that might actually be a bounce into a new cycle. Plus, we do see multiple pokes below, relatively wide Bollinger Bands, although they're not extremely wide yet. So while I do expect a bit of a bounce into a new cycle in Bitcoin, that might actually happen after perhaps one more poke below further widening Bollinger Bands. And that is all for now. For much more details on specific tickers that we like and we follow, make sure to join us at myfinancesteacher.org. Have a terrific Thursday. Bye bye.